Have you ever really stopped to think about what your bank does with your money? I mean, we tend to see them as just a safe place to park our cash, right? But the truth is, it's so much more exciting than that. Today, we're going to pull back the curtain on commercial banks and see how they are, in a way, the secret money-making machines that power our entire economy. So let's get into it.
So let's just start with the big, kind of crazy question. Is your bank creating money out of thin air? It sounds like a magic trick, doesn't it? Well, the answer might actually surprise you. Because what if I told you that the whole idea of a bank just taking your money and lending that same money out to someone else is only half the story? Stick around because we're about to uncover the other half.
All right, so before we can really expose this magic trick, we need to understand the stage and who the main actors are. So first, let's just do a quick tour of the financial world to get our bearings and see who the key players are. At the highest level, you have what's called a financial institution. You can basically think of these as the plumbing system for the economy. At its core, it's any company that helps money move around, connecting people who have it with people who need it. They're kind of the ultimate financial matchmakers, and they keep everything flowing.
And this world has a ton of different players. You've got the central banks, they're the big boss, the government's bank. You've got insurance companies, stock brokerages. But for our story, we're going to zoom in on the one that you and I deal with almost every day, the commercial bank.
So, what is a commercial bank exactly? Well, the definition is pretty simple, but man, it is powerful. It's an institution that's licensed to do two main things: accept deposits from people like us and provide loans to others. And that relationship, that little dance between deposits and loans, that's where the secret is hiding.
And listen, we're not talking about some abstract concept here. We're talking about the buildings you walk past and the apps you use every day. In Nigeria, for example, you're looking at Access Bank, Zenith Bank, or First Bank. These are total household names, and they are the absolute backbone of the country's financial system. So now that we know who we're talking about, let's dig into what they actually do. Because the secret to how banks create money isn't locked away in some underground vault, it's hidden in plain sight, right there in their day-to-day operations.
Okay, first up are the two big ones that everybody knows. One, they accept deposits. They give you a safe place to store your money. Two, they provide loans and advances. They lend that money to people and businesses who need it. This is the classic textbook model of banking we all think we understand.
But here's where we find our first huge clue. Look at number 3, credit creation. Ding, 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 that's it. That's the technical term for the very thing we're investigating, the bank's ability to, well, create new money just by lending. We're going to break down exactly how that works in just a minute. For now, just know that they also act as your agent, paying your bills and handling checks for you.
And finally, to round it all out, they do offer safe custody for valuables. The classic safety deposit box. And, super importantly, they facilitate payments. Every single time you swipe your card or make a transfer, there's a commercial bank in the background making that happen seamlessly.
But look, a power like creating money doesn't come without risks. This entire system is a high-stakes, high-wire act. And to really appreciate how it's all kept under control, we need to understand the challenges that banks, especially in a place like Nigeria, are constantly up against.
The biggest dangers? Well, they're tied directly to the business of lending money. First, you've got loan defaults. Anytime a bank lends money, there's risk that the borrower just can't pay it back. It's a huge problem. And right alongside that is the constant battle against fraud and forgeries. There are always people trying to cheat the system.
Then you've got pressure coming from two different directions. There's internal pressure to maintain ethical standards, to do the right thing. And then there's massive external pressure from intense competition. Every bank is fighting tooth and nail for your business, and that pressure shapes every single decision they make. And finally, banks don't exist in a bubble. They have to navigate this incredibly complex maze of government regulations. And, maybe most importantly, their health is tied directly to the health of the whole economy. If there's a national downturn, you can bet the banks are going to feel it, big time. Okay, we've defined the players, we've seen what they do, we understand the risks, all the pieces are on the board. So, it is time for the big reveal. Let's finally connect all these dots and answer that central question: how do banks actually create money?
All right, just follow the money here. It's simpler than you might think. Step 1, someone deposits 100,000 naira into their account. Now, the bank is legally required to hold on to a small piece of that called a reserve. Let's just say for our example it's 10%, so the bank keeps 10,000 naira. Step 2, the bank then loans out the other 90,000 naira to a borrower who wants to, say, buy a new laptop.
Step 3, that borrower spends the 90,000 on the laptop. And Step 4, the person who sold the laptop now takes that 90,000 naira and deposits it into their bank account. And right there, that is the magic moment. That 90,000 naira is now a brand new deposit, and the whole cycle can start all over again.
This is the crucial point, so let this sink in. The original 100,000 naira is still sitting in that first account. It never left. But that 90,000 naira loan just became a new deposit in a second account. Suddenly, the total amount of money in the banking system just grew to 190,000 naira. That's credit creation. So, is it created from thin air? No, not exactly. It's created from debt.
Now, your first thought is probably, whoa, hold on. Couldn't this just spiral out of control and create infinite money? It's a great question, but the answer is no. This incredibly powerful process is actually kept on a pretty tight leash by some important rules and economic realities. Let's look at the brakes on the system.
So what stops this money machine from going wild? First, there's that cash reserve ratio. The central bank sets that number. If they raise it, banks have less to lend, and the whole process slows down. Next, there's us. If we decide to pull our cash out of the bank and hide it under the mattress, that money leaves the cycle and can't be multiplied. You also just need willing borrowers. If nobody wants to take out a loan, no new money can be created. And finally, the central bank is the ultimate driver here, using all of its tools to either speed up or slow down the entire engine.
So let's just recap what we've uncovered here. Banks aren't just passive vaults. They are active creators of money. This money creation happens every single time a loan is issued and then redeposited. But this power isn't unlimited. It's controlled by regulations, by the economy, and even by our own habits. And this whole process, this engine of credit creation, is absolutely fundamental to how modern economies grow. And that leaves us with one final, pretty important question to think about. We've seen that the amount of money in the system isn't fixed. It's constantly expanding as banks lend. So if they're always creating new money, what does that mean for the value of the money you've already worked hard to save? That's something to chew on. Thanks for digging into this with me today.